Yeah, so it's been a minute since we've done one of these. But basically today we're gonna be going over SOAP. So it's kind of like a lecture and then we'll follow it up with an AMA. This is kind of like a high level lecture. We're not gonna get too deep into the technical weeds, but hopefully enough that everyone kind of understands how it works. So with that, let's go ahead and dive in. For those of you who are new to the community, just gonna give a very quick overview of Quai. But Quai is effectively a blockchain that's trying to take the best properties of Bitcoin, Ethereum, as well as stable tokens, and put it into one unified, scalable proof of work network. The way that we're able to scale proof of work is using a hierarchy merge bind blockchain, which allows us to fully parallelize transactions through both shards and subnets. Um, this can scale north of 50,000 transactions per second. We've shown it over at 7,000 TPS in a 9 shard setting. And doing that too in this architecture, you keep your node requirements pretty low at something equivalent to an Ethereum validator. So with that, let's jump into SOAP. One of the first pieces that we have to understand about SOAP is how merge mining works, or what merge mining is. Maybe we can start there. Um, but basically, merge mining goes back to 2011, and the first project that used merge mining was called Namecoin. And basically, what it does is it allows a chain to make a commitment to another chain. So the way it worked for Namecoin is there was Bitcoin, and Namecoin would insert its sort of block hash um, into the Bitcoin header in the script sig. And if a Bitcoin block was found that had sufficiently high difficulty to show that a certain amount of work had been done, Namecoin would be able to interpret that Bitcoin header as their proof of work. So from um, Namecoin's perspective, Bitcoin's block header is basically a big fancy knot. From Bitcoin's perspective, it doesn't really know about Namecoin. It's just extra data in its block in a field that it didn't really already use. So Bitcoin doesn't really know that Namecoin is there, but Namecoin inherits the immutability of Bitcoin over time. Um, in the same way, transactions on the Bitcoin network become immutable over time. So if we bring that to today, we're basically proposing that Quai can do this with things like Bitcoin, Dogecoin, Bitcoin Cash, Ravencoin, a plethora of different proof of work systems. And one thing that's sort of interesting about Quai is that because we have work shares, we can use that feature to allow us to easily go multi-algo in a secure way. Um, so the kind of mechanics of this is that the um, Quai basically takes its block hash, if you will, and it sticks it into the Bitcoin block header via the Coinbase transaction, specifically a field called scriptsig. When a block is made by a miner, that's sent back via Stratum to the Quai node. And to make the Quai block, you basically take that Bitcoin header, you can find that block hash commitment, and then if the Bitcoin block meets the required difficulty for a Quai share, then that becomes a valid sort of proof of work for that Quai share. So I'm going to skip this couple. So that's the idea of merge mining, and then we get into the idea of SOAP. So SOAP is Subsidy Open Market Acquisition Program. And the reason that we're doing it is because the economics of proof of work fundamentally suck. So while proof of work is better from a security decentralization and censorship resistance perspective, it suffers from the fact that miners are putting in real resources, which then cause them to sell to cover those resource inputs every day. So you get very negative sort of sell pressure every day in a proof of work network. And then what that means is for the price to stay consistent or go up, you need new money to come in every day in excess of what is sold. So right now for Bitcoin, the rewards are around $50 million a day, or 55, I think. So that means for Bitcoin's price to go up, you need at least say $60 million of brand new money coming into Bitcoin to offset what's being sold by the miners. And right now, the mining profitability on ASICs is very high, so we know that pretty much every miner is selling all their Bitcoin every day. Um, so that's kind of like why proof of work's not great from a economic perspective, though it has great characteristics from every other perspective. So what exactly is SOAP? So SOAP is merge mining, but instead of paying the subsidies chain reward to the miner, it's paid to a protocol address that sells the subsidy token to buy Quai, and then that Quai is either burned or is used to reward staking of Quai. So if we look at the Namecoin example, um, when miners would merge mine Namecoin with Bitcoin, they get both rewards. So they get a Namecoin reward and they get a Bitcoin reward. What we're basically saying is if you merge mine Quai, instead of getting both rewards, you just get Quai. Now the reward that in the other token, if it's Bitcoin Cash or Dogecoin, basically goes to at least for now a foundation address, which they'll use to sell that token at market and then buy Quai at market. So effectively, what happens is for any given day, you're going to be buying as much Quai in market as you're emitting to the miners. So instead of having a negative pressure on the price every day, kind of worst case scenario, you end up in this neutral situation. But if you have any speculative miners or holders, you end up in a positive situation, meaning your price should be improving every day rather than declining. Um, so again, this is kind of how stuff works. So basically, there's a pool that is run that sort of proposes headers in the subsidy chain that propagate around Quai Network. Um, the GoQuai nodes then consume those what we call augs templates or auxiliary templates, uh, and they put their current sort of Quai block commitment into those templates to produce a subsidy chain block that will be potentially valid in the subsidy chain. So the committee here is really kind of like a pool on the subsidy chain that then produces these templates which go through the network. And from a Quai network perspective, this is not sort of intricate coupled, meaning the validity of those templates only matters to Quai in that it generates revenue for the network, but the validity of the block doesn't require that pool to always be online. It doesn't require those templates to always be lively. Um, so you basically get a decoupling between Quai and the subsidy chain. Quai can still mine if there's no new templates being produced. Now, obviously, we want new lively templates to be produced so that SOAP is earning revenue that's going to buy Quai. But if for some reason it goes offline, um, the Quai chain doesn't stop. It just keeps going. It's just not making the SOAP revenues anymore. It would be akin to the current situation where Quai is mined. It's strictly inflationary and it doesn't have an offsetting buy side. Now, obviously, you want that pool to be as lively as possible to keep that buy side all the time. But the point that I'm trying to make is that they're not dependent and they're not coupled. So if we look at the centralization sort of this committee proposing blocks for the subsidy chain, that centralization is relative to the subsidy chain. It's not relative to Quai. So anywho, the templates are made, blocks are mined, those come back to this committee via, being Quai work shares or blocks. The headers are extracted and then submitted to the subsidy chain. Some of those get paid out, obviously, and then that money then again is used to buy Quai at market. So then that gets us to step three, which is the Quai that's acquired at market can then be either burned or used to reward staking of Quai. So this is just kind of looking at the daily available revenue of proof of work emissions, and these are just highlighting the coins that we're going to be initially supporting. So we're adding two completely new algorithms, which are Shaw and Script, and we're moving ProgPow over to Kapow. So Kapow will replace ProgPow in this fork. It's effectively the same algorithm and only really differs by a string. So, but these are the emissions per day. So Ravencoin has about 40,000 per day, Bitcoin Cash 250,000, Litecoin 400,000, Dogecoin 3.5 million, and Bitcoin about 53 million. So when we kind of go online, um, we can, yeah, we got a slide for that. So, so what does this like practically mean, for the system? Um, Proof of work previously was kind of a net negative drag on price and adoption, and you can see that in the launch of proof of work coins. Because basically when they come out, there's a very high inflation rate. There's this long drawn out period of accumulation, and then eventually the price goes low enough, um, and potentially there's a halving, so the stock to flow decreases such that it gets less than the demand, and eventually you get this positive reversal. In Bitcoin, this still happens on these 4-year halvings, wherein there's periods where we have these positive reversals, but then eventually the supply or the demand kind of runs out relative to the supply, and you get crashes in the market. So there's really sort of these like 2-year periods where it might be smart to buy Bitcoin, and there's also 2-year periods where it's probably not a good idea to buy Bitcoin. So even Bitcoin suffers from this sort of negative proof of work loop that exists. Um, what we're basically saying with SOAP is instead of this being a negative loop, it can always be a positive loop. So instead of getting this negative sell pressure every day, what ends up happening is you're neutral or slightly positive. That slightly positive buying means that you would expect the hash rate to go, sorry, the price to go up. The price going up will actually cause the hash rate to increase. The increased hash rate will create more buying um, in market, which should then increase the price. So you end up in a virtuous circle where the system and the work actually grows the system with time. So yeah, basically, Shaw and Script basically enable Doge, Litecoin, Bitcoin Cash mining, which gives Quai access to up to 58 million a day in daily revenue. And these are kind of just ideas of what might happen if you say took 1% of the sort of available um, revenue uh, on a yearly basis. So if you were to get 1% of the three algos, you're looking at about $200 million a year in buybacks. And so the net effect of that is if you add staking, you actually get a multiple. If you add burning, it's helpful, but it doesn't like create any type of force multiplier, so to speak. But with the using those buybacks for staking rewards, you can kind of get more capital to come in than you would get if you were to just burn the tokens. So if we think you're doing this $500,000 per day, which is 1% of BTC, the point at which you do that, if you're rewarding that all to staking, it would basically mean that you would need roughly 900 million in TVL. Um, so, and I think the math is actually off on this slide, looking at the numbers, but you need 900 million in TVL, which if you're targeting, say, that's only 20% of maybe it's half of all existing Quai. your actual market cap would have to be double that 900 million number. So you can get very high increases in the net pricing of Quai through SOAP and using the subsidies that are generated to reward staking. So there's also some important features of the launch economics. There's a timing tailwind. So Quai rewards, as any miners know, have a 2 week maturity. So when you mine Quai, you actually have to wait 2 weeks to get it. And subsidy rewards in most of these chains are paid out within about a day. So what will end up happening is we'll get subsidy rewards 2 weeks before we actually pay out the Quai on the other side, which means whatever sort of happens in that 2 week period is positive pressure only. And then if you have sort of growth or sustaining of the hash rate, um, it means that 2 weeks later, you're going to get maybe selling from those prior rewards that you gave out 2 weeks earlier, but you're still going to have equal or greater amounts of buying every day. So that sort of filling of that capacitance window of 14 days is a very positive, from the launch of SOAP's perspective. And then there's also a second capacitor which goes into locking. So basically, if people lock Quai, they're going to end up having kind of like a 30-day lock-in window, which means for the 30 days that the Quai is being mined, or the subsidies are being mined, they're being used by Quai at market, but they won't actually mature for the lockers for 30. Um, so you end up with sort of 30 days over which there's only buying and no commensurate selling. So what is the net sort of opportunity here? So SOAP really transforms proof of work economics by creating protocol revenue rather than having the protocol have to actively build and grow demand to just keep its price constant, right? This is obviously like a huge um, plus for us. And the other thing that I would say here, just as a comment, is what this is really doing is this is realizing that these larger systems with slower blocks have underutilized hash. And merge mining allows us to use that underutilized hash in a way that basically utilizes it more. So there's like this resource, which is hash rate, and it's creating the ability to make an immutable ledger, which is valuable. But that immutable ledger can generate more value for more people if it has higher throughput, if it has a energy dollar like Chi, if it has Chi with cache-like privacy properties, if it has a fully programmable EVM compatible token like Quai. That is net added utility value for a user base. If it has Visa and MasterCard like settlement speeds, as well as scale, as well as actually much superior fees, right? Um, so what we're basically saying is this underutilized hash rate can be used to create a much better system with a much greater amount of utility. And then what SOAP does is it uses that hash rate, and then based off the choice of the people using the systems, it circulates that value back into the system that they choose. So what it's really doing is it's making proof of work competitive. The sort of moat that has been set up around Bitcoin with people not doing this SOAP-like strategy has allowed Bitcoin to decay into this thing where you have developers having these fights over highly esoteric and meaningless things for years at a time. And it creates this sort of dope show where you have people like Saylor telling everybody that real Bitcoiners use Visa or MasterCard to do their payments. That is an outcome of the current economics of proof of work. But that outcome can no longer exist once SOAP exists in the world because the expense to getting a chain as secure as Bitcoin and then allowing the value to flow back into the system that people choose rather than having value only flow to the system that has the greatest network effect, has what has been holding proof of work back as a competitive system. But with SOAP, it makes all proof of work systems competitive with each other up into the point that they're heuristically approaching the maximal utility possible given the physically governed constraints of consensus systems. So this is really exciting for me from the perspective of this makes proof of work competitive. And even if Quai isn't the winner, it means that there will be a winner like Quai. So this is like how we win the game of actually creating a parallel monetary system and separating money from the state because it forces the economic outcome to match the physical constraints. So with that, that is SOAP, and we can go to questions.
Rock on. Thanks, Dr. K. Really appreciate that presentation. For those of you tuning in from a variety of places, my name's Matt. I'll be fielding some questions from Discord. So for those of you hanging out with us on X, we are simulcasting from Discord. Check the pinned tweet up above to tune in. We're also recording this session as well for you to review at your leisure. So we got a few questions coming through in chat here. Before I dive in, I just want to highlight, my quick takeaways. My hot takes are, this is making proof of work competitive again, making hash even more useful, and really solving for that way for proof of work chains to generate real revenue without having to go chase down all the demand to offset the mining sell pressure. So those are my hot takes. Really appreciate the presentation, Dr. K. We have some questions coming through here right now. I'm just going to start at the top. Swim Good, shout out to Swim Good for kicking us off here, builder over here in the Quai Network community. He says, SOAP economics are designed to be dynamic, with the reward share potentially stepping down as hash rate and subsidy chain inflows grow. What objective metrics or controls will dictate the timing and scale of the step down from a high initial reward share?
Um, Sorry, what time was that question?
11:17.
Okay, let me go find it. I need to read that one again.
Sure. To focus on the question, he asks, what objective metrics or controls will dictate the timing and scale of the reward step down from high initial reward share?
So, I mean, he's talking about the Quai cheat controller. Is that what he's asking about?
Potentially. Swim Good, feel free to expand
I mean,
on that
nothing
question.
is changing about the Quai cheat controller. Um, we
Okay.
will be stepping up the um, initial like KQI with the forward. Um,
Got
that's
it.
so that we can generate greater mining revenue.
Okay. Yeah, maybe expand a little bit on the reward incentives for SOAP versus non-SOAP mining, and then the differences between
So,
different
so
algorithms.
technically, with non-SOAP mining, you want your rewards to continually decrease with time, which is how they're currently set up. Um, with SOAP mining, you technically want them to increase with time up into the point that you outstrip the available mining rewards from the subsidy chains. Um, so you actually want them to keep increasing till you are 100% of all the other networks. Um, so there's a slightly different sort of thought process with how that controller should work. Right now, it's set up to work with a negative decay. Um, we'll probably have it so that it has a neutral or positive factor to it, at least up into the point where we start outstripping the networks that we're mining, which is also measurable, by the way. So this all can algorithmically be set.
Got it.
Right? Like the fundamental purpose of SOAP is to maximize revenue.
Right.
Like that's it. So you have all the information you need in the system to algorithmically just try to maximize revenue.
Let's see here. Next question here. I'm gonna state two at once here. So they kind of tie in together. Nintron is assuming question mark Bitcoin won't really be mined until our difficulty gets high enough. Pairing that with Kishore's question, how do we decide which donor chain to attach to, static whitelist or adaptive, depending on liquidity plus
It's
correlation
just the
wide
committee.
economics?
It's just the committee does it.
The okay,
Right. So like the committee is effectively a pool for the other chain, right? So
right,
it's not like a Quai committee, it's just a committee that is the pools for the other subsidy chains. So obviously we wouldn't mind Bitcoin because our payout frequency could be like 100 days initially. Um, but if we do it to Bitcoin Cash with the same sort of assumption of input hash, you'll get a block every day. So obviously, like it would make sense to start with Bitcoin. We'll start with Bitcoin Cash.
got it. Okay, cool. Great questions, guys. Keep them coming here. Keyshore is restating a question Noah asked. After the SOAP fork, what prevents a miner from modifying GoQuai to mine through their own private pool, effectively bypassing SOAP's off-chain monitoring and validation systems?
It's not off
Since miners,
chain.
it's not off-chain. The,
So
the
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 committee is
template,
signing a
right?
template. So if you want a valid
Uh,
augs file, it has to come with a lively valid template. So the templates are designed such that you can't permute any of the bits that we care about that would invalidate the block or change the payout.
got it. And only that committee can produce those templates.
Correct. So then if the committee goes stale, you can still produce, but if you produce on stales, you're not going to make as much money. There'll be like a penalty for stale production.
Okay, great question. Shout out to Noah and Kishore for providing that. Nintron has another SOAP question here. How will workshare algorithm share be determined? That is, let's say there are 9 workshares per block. Will it just be hard set to 3 or kapow, 3 or script, and 3 or SHA-256? Or will there be some sort of dynamic system that if a certain algo is underutilizing their share, less allocated to them and more to another?
Yeah, so there's two controllers. One controller or there's a controller per algo. So there's a target, say 3 shares for each algo, and the difficulty controller independently adjusts based off of the achieved number of shares per algo. So that's one. Now, longer term, there's also a secondary controller, which is what the split should be. Because we're merge mining these systems, we actually know the difficulty of the subsidy chain. So once we start approaching 100% of the subsidy hash rate, we know we no longer want to keep incentivizing that share type. So we can start to balance out the ratios. So what's going to happen first is we're going to run out of uh, Kapow shares that can be paid. So the ratio will adjust. So instead of saying targeting 3 SHA, 3 script, it'll automatically say, I want 3.5 SHA, 3.5 script, and only 2 kapow. And really that algorithm is just operating to maximize revenue during growth. So you don't want, say, to outstrip the subsidy revenue available in kapow, because for every dollar you do that, you're directly paying that again as an inflationary mine subsidy. So you want to reshift the target as you fully um, sort of outstrip the available subsidy payments.
Got it. Got it. So that that adjusts with the available emissions per. algorithm.
Yeah, because you can basically, based off the aux files that you're mining, you can see what the difficulty is in the other network. So if we say
Right.
we don't want to exceed 80% of the other network's hash rate, um, at that point you start squeezing down the available share.
Nice. Okay. Great questions, guys. Keep them coming here. Gabriel has a
So
couple
so so like
questions.
the long term, right, growth
Sure.
here is we're out like we'll basically get to that point with Ravencoin first. Um,
Yeah.
and that would represent, like 40,000 a day in subsidy buying. And then the shares will start redistributing. So then it'll be split evenly still between like Shaw and Script. But eventually, when we get to say 4 million a day in buying with Script will have to start squeezing down, right?
All right.
And then Bitcoin will keep making up or Shaw will keep making up a larger and larger share up into the point that um, you basically like represent the ratios of available subsidies, right? So it would end up being like um, you're actually trying like if it's all perfect, and you can't do this perfectly because of the number of shares, but if it was perfect, you would have and you were like at the size of Bitcoin, so you're fully exploiting all the revenue. Um, it would look like something like you want sort of 90 Shaw shares, 9 script shares, and just a single Kapow block. That would be like the end point. If you're trying to fully like exploit things at the scale of Bitcoin.
Great questions, guys. I really appreciate it. Keep them coming. We're here for a while now, so we got more. Gabriel has a few questions here. One, I believe we've already answered, but it's definitely worth double clicking. First one, is it theoretically possible for a competitor soap pool to compete against the soap pool the foundation is building? Like, for example, if miner wanted a greater share of rewards from the sale of subsidy chain tokens instead of all those rewards going to stakers or being burnt.
Um, yeah, it like nets out is the thing, right? Like it nets out to um, the miners still selling, right?
All right.
Um, if you look, right, the subsidy pool is still sending 100% of the revenue back, right? You can't send more than 100%. So, like, if you do a split, um, you're going to kind of get like the same outcome in terms of uh, aggregate selling. What we're basically guaranteeing is that you must sell the other side, right? So, like, your choice in the economic design is you have two tokens. Do I sell Quai or do I sell the other token? What SOAP forces you to do is sell the other token.
Right. Yeah. So I'm kind of speculating here, but it sounds like, really it's against the miner's incentive to do otherwise.
No, I mean he's saying if there's like a different pool type, right?
Right.
Um, yeah, so like if if there's a different pool type that like does a split, in a competitive chain, effectively what they're saying is they're saying, if let's say Casper tried to do this, right? They said, okay, we're gonna do a 50-50 split. We're gonna give both tokens to miners, which is traditional merge mining. It's the miner's preference then if they're gonna sell the Casper or they're gonna sell like Bitcoin Cash or Dogecoin, right? Um, So that's like demonstrably a worse outcome because some of the miners will choose to sell some of their Caspa, right? If we're basically saying you have to sell the other token, you're forcing the value to flow back to Quai.
Okay. Rock on. Great questions, guys. Next one here. If supply inflation is a problem, why not just make the core Quai emissions curve more aggressively deflationary?
Um, I mean, it is deflationary, but the thing with proof of work is you want to have um, one of the pieces of it is it creates a mechanism for distributing tokens that is market based. So people refer to this as a fair launch. What this is actually recognizing, though, is that you don't have to have net selling to do that. It's not about distribution, it's about diffusion. So every day that this happens, you're still diffusing tokens, which is creating distribution using a non-inflationary process that's still market driven, but it doesn't lead to an increase in the total aggregate supply of the token. So you still achieve this sort of like fair concept around proof of work, but you don't have to pay for it through inflation.
Got it. Okay, I believe I follow that. It's, really ensuring the fundamental utility of proof of work.
No, but like there's different parts of it, right? Like proof of work is immutability. Proof of work
Right,
is, decentralized, unpermissioned. But basically, one of the other aspects was that it's a distribution mechanism. What I'm saying is it's
right.
only a distribution mechanism in the old setting. What you're actually saying is it's a diffusion mechanism. Like the property of it is diffusive, right? So like soap doesn't hold the inflationary property, but it holds the diffusive property. And the diffusive property is actually what you care about in traditional power economics. The inflation property is just bad. You want a diffusive property, not an inflationary property.
Got it. Okay, cool. Rock on, guys. All right, so questions are flowing now. Let's see here. Question from Keyshore. Is the effective buy pressure on Quai generated by SOAP quadratically sensitive to external hash power contributed by miners?
I do not understand what he's trying to get at.
Okay. No sweat. Kishore was proposing in a formula yesterday. Maybe Kishore dropped something below, and we'll expand on that one. Moving right along here. Uh, Next one from Kishore. If SOAP starts redirecting X Quai per day for market buybacks, how does that affect Quai Chi equilibrium under current network activity?
Um, so this shouldn't really have a net effect on um, Quai Chi. It's like an orthogonal independent parameter.
Got it. I think one of the things we keep talking about is really in order to achieve everything we hope chi can be the energy dollar, we need a strong market in Quai. And so this really expedites that first bit.
Yeah, I mean you have to have a strong and useful market Quai before you can see Chi like really develop. But this is all really completely orthogonal economically um, to that relationship.
So got it. Cool. Next one here. How would future Quai emission schedules affect short-term ratio fluctuations?
Um, yeah, I mean, anytime that there's like a discontinuous change, like it affects the Quai Chi ratio, obviously.
Right.
Um, with SOAP, obviously, this is a huge sort of positive upgrade to the system, and with that, we have to adjust that ratio. Um, Ideally, we don't have to sort of intercede in the future, but at the end of the day, guys, like we're playing a game to create global money. Um, so, early on, as we learn these lessons or find major positive economic exploits, like we gotta use them, right?
No, that makes sense. Um, okay. All right. Next one here is pertaining to the pools themselves, who wish to adopt or integrate with SOAP. What configuration changes are needed for pools to start mining SOAP?
Yeah, so the pools basically have to modify their existing versions of Kapow, Shaw, and Script Stratum. They're actually stripping functionality from them. So we don't anticipate that being a huge barrier. We have talked to them already about integration. So right now we've done a kind of like our first internal DevNet where we did multiple ASICs with multiple nodes with multiple people mining all three of the um, subsidy chains or algos, and we're basically shaking that out to get a an endpoint and a commit to the pools, hopefully today or tomorrow, so they can start developing um, those modifications while we focus on the testing of the consensus changes. Um, so
Right. Let's see here. We have a non-SOAP related question, but before we get to that,
it's it's
Dr.
it's
K.
actually it's actually interesting. Like we definitely learned things about ASICs that like we didn't know doing this.
Okay.
So there's already been a couple of sort of iterations to make sure that the way that this is all formulated is compatible with many different ASIC vendors. Um, so I've been around a bit and I've heard of ASIC boost before. I wasn't um, privy to the specifics of BIP 340, but we figured that out. Um, so yeah, I mean, we've already done a rundown. We've gotten kind of the StatNet up. There's like an issue with the signature on the version byte that we're dealing with today. Hopefully, we can test it again. Then it all works out, and then we can get it over to the pools.
Yeah, that was a fun conversation. ASIC boost. Look it up, guys. Interesting stuff. Okay, so Kishore dropped an equation down in chat, Dr. K, at 11:50. His question is, it is bipressure quadratically sensitive to external hash power? And he's got an equation down there. I'll read it out for the audience. Uh, Bipressure equals external hash power squared multiplied by cell pressure multiplied by changing time window over which subsidy funded purchases occur. Looking for thoughts on whether it's, I guess, the chat is debating whether it's linear or quadratically sensitive.
Um, because of the nature of log of diff on Quai, I think that this is correct, but it also has the dependency on KQuai. And KQuai can be linear or nonlinear, but that's sort of externally market determined. So it depends on the KQuai behavior, and in some cases, um, you could actually see KQuai um, look exponential as well. I think very minimally, like KQuai would be linear, but there's certain situations where it would be super linear. So I think this might be a correct statement.
Interesting. Nice. Man, community's diving deep on this. Love to see it. Christopher has a soap related question here, and then we'll get to a few non-soap ones, and then I got a question for you, Dr. K, building on our chat yesterday. Christopher asked, for miners, will miners be able to soap mine and choose chi as their reward?
Yeah,
Boom.
nothing
Great
changes.
question. Great question, Christopher. Nice. He's also noticing more miners waking up every day and realizing the option of choosing which networks they soap mining and which tokens to get rewarded in is inspiring. I agree. Absolutely, Christopher. Love to see it. Community's going ham right now. We got some new community members tuning in both on X and here in the Discord. So I'm going to start with some of their non-soap related questions here. The first one is from LK1234. Does the energy dollar model become vulnerable if energy costs become extremely volatile? Mining hardware efficiency dramatically improves, or the global shift to cheaper renewable energy fundamentally changes the cost basis it's pegged to.
Um, the aggregate economy would be subjected to all of those factors simultaneously. Um, so I don't think it really negatively impacts chi because it'll be as volatile as the aggregate external economy. Um, the only factor that's maybe somewhat decoupled would be the efficiency, but given the nature of where that technology is in development, I don't think there's going to be a step change. Um, and then from the energy perspective, if energy becomes cheaper, goods become cheaper, so your purchasing power is still maintained. Um, but I also don't see a step change in that as well.
Right. Okay. Great question. Really appreciate you chiming in here. I absolutely love this question. Wotown, shout out. I've been thinking about it. I'm sure a lot of us have as well. How do we prevent BlackRock from hijacking Quai like they did with Bitcoin?
By not sucking.
I
Um,
love that answer. Yeah, having the utility that everybody wants and needs, kind of, dovetailing into that social resiliency, right, Dr. K?
yeah, I mean your sort of resiliency in your um, ossification of the protocol that's enforced by the economic relationship between the miners and the users maximizes when there's a large number of miners and users. And that happens when the usefulness and the profitability of participating increases. So I would say Bitcoin peaked ossification probably in 2017. And then from there, it's become more and more centralized over time. Um, so if you have a system that can continue to grow, continue to get a higher diversity of participants, continue to generate revenue from multiple sources, you're going to create a more decentralized system. So yeah, don't suck and you will be unco-optable.
So awesome. Great question, Wotan. Love those questions. Dr. K has always got great takes. Don't suck.
Yeah,
Yeah.
basically, right? So I mean, right
That's
now, I would challenge anyone to really say what you would add to Quai that you would need to like increase utility that even on just technical merits alone, people would agree with. Um, I don't think there's much of any space for that. So, part of the co-opting is that you need to change, right? And then from like your insufficiencies, you create openings for control, right? But if there's a heuristic approach to the physically limited, um, if the physics of the devices get better, like your limits go up, as long as there's no like major holes that loses out on a tremendous amount of utility, then there's no real room for anyone to say anything.
Yep. Yeah. Ah, man, there's a great short that kind of synthesizes, this entire conversation. I'll try to dig that up.
Well, I
Uh,
mean, I'll go back to TCP/IP, right?
yeah.
Right. TCP/IP basically had like three changes that mattered of any import, and the only one you guys even know of was IPv6, and that's 30 years old at this point. Nobody's actively um, lobbying TCP/IP for changes because it works.
Right. Right. Bingo. Okay. Rock on. Great questions, guys. Yeah, I got distracted. That short is awesome. As soon as I find it, I'll rebroadcast that. Let's see here. Just quick time check. We're a little over. We got another soap question here. I'll ask, and then I'll sneak one in before we let you go, Dr. K. Nintron here. Let's see here. Yep, I believe that's it. Okay, so wait, sorry, stand by. Actually, let's go with this one. Kishore asked, "How could we increase awareness and visibility of soap in the mining circle?"
Always a good question. Um, I think we're gonna actually start up spaces again with Wolf that have a lot of mining presence. We're also looking at potentially doing videos with a couple of the big mining channels.
Yeah, I'll add.
But
Shout
I
out.
mean, I also just say, right, like if you look at miners, they become aware of tokens when they're profitable to mine. So my expectation is once we get the pools live and they start showing up as, profitable endpoints, that in of itself will be a marketing mechanism for most miners.
Absolutely. Absolutely. And shout out to the ambassadors and all the great work that they do. Uh, there will be even more content coming soon to help force multiply you guys and make all those conversations easier.
I will
Oh
say,
man,
by the way, that um, there's going to be, I think, a little bit of a land rush to Sean script,
yeah,
um, because right now there's no hash rate. So, I mean, we're going to set it the initial such that it should be profitable, and we're going to also set a floor because we don't know kind of the elasticity of Sean script. Um, but Sean script could end up being twice as profitable as Kapow um, initially to incentivize people over. So depending on the net elasticity, there could be money to be made there.
right. Yeah, good thoughts. Uh, Man, lots of opportunity. Like every week, there's net new opportunities for pretty much anybody into crypto from top to bottom in the stack. SOAP adds so much more opportunities for even more miners, stakers, folks looking to participate in the system at every layer. So uh, check it out, guys. I'm gonna work on pinning a tweet up above in the space here so you guys can learn more about Project SOAP. Dr. K, my question is yesterday we had a brief conversation on a space about useful proof of work and how it kind of fixes this dead internet theory. I would love to have you opine on that a little bit before we wrap it up.
Yeah, do
So,
you want to just do me a favor
yeah,
as I'm answering and just pull some of these questions related to the order of the influence on hash, um, so I can look at them
yeah,
after.
yeah, we'll do. Absolutely. Okay.
Um, yeah, so
Yeah, dead
so
internet theory.
dead
How does the
internet.
TCP/IP of value solve for that?
Yeah, I mean, basically, we came up with TCP/IP for information, but TCP/IP itself needs resources. It needs aggregators at some level for discovery and distribution. Um, and with that, you get centralization of where information is served, how it's discovered, who owns data, who's it's shared with and retained. Um, and because we've kind of created this attention-based economy from that, you end up with a system where you want to use bots to increase information, increase clicks, increase apparent interactions. So what ends up happening is, if you look at your X feed, more and more of it is bots, right? Um, and if it's not directly a bot, it's a person that's doing their damnedest to engagement farm, right? But that is downstream of the model wherein the resources are paid for via attention. Um, and so I guess the statement is if that you add a layer that's as fluid as TCP/IP is, but it includes value, you can rewrite the model of payment for the data and the infrastructure of the internet. And ideally, you can then improve discovery, um, and you remove the incentive for the bots effectively, because only genuine interactions that are meaningful will get paid for, and those that are not won't have value to exist anymore, which means you'll get a better signal to noise ratio than what we currently have. This actually goes back quite a ways in time to Hashcash, which was how do you do email with a spam filter, right? And so this is maybe kind of full circling on that, but you're doing it in a way that allows it to be used for anything, by having a proof of work system that can do sort of micropayments at human level scales.
Huge. Huge. I absolutely love this topic. I think we're definitely in the age of instant access to information. Definitely getting overwhelmed by information. We're seeing some of the old guard start to fall. But to Dr. K, your point about dead internet theory, that is yet a problem to be solved, but a true value layer for the internet could allow humanity to align and communicate value more effectively and get out of this current spiral that we're in. So, super excited to continue that meta in other conversations. Love to get the community's thoughts on that. But Project Soap, guys, it's been a great chat today. I'll be collecting some of these other questions that funneled through here. Team's got to get back to it. Still a little bit of work to be done before we move into testnet. So keep your eyes peeled for all of that. Any final thoughts, Dr. K, before we wrap up and I do some housekeeping?
Nope, appreciate everyone for coming. Big update. Obviously, this is the biggest change we've, you know, have made since launch. But hopefully it will be very positive in terms of economics and mechanics. Um, so yeah, appreciate everyone's interest. Come in, tell your friends, tell your family, tell your miner buddies. Uh, Great things happening here. So
100%. We got some great content for you guys as well. If you haven't seen it, Mineable, after 4 years, launched a video discussing how Quai is, is really delivering on some of the initial promises of Bitcoin and crypto writ large. I will drop those in chat. Additionally, if you guys are even more interested in SOAP, you want to check out the SOAP calculator we published recently. That is soap.q.ai.